message. Boy, look, what's funny is Darren, it gets less and less and less people all of the time.
Going on. Yeah.
So do you think I have actually taught everyone everything they need to know? I'm wondering if that's the case. Leanne kind of is like, yeah, I don't know,
No, I don't think
maybe you
so.
did.
It's not that. I'm a little wondering what's going on. Even our leaders aren't even on here right now. So I'm going to reach out to a bunch of them, Scott. You just keep going and let me see where everyone's
Yeah,
at.
absolutely.
We might
Absolutely.
start this thing at 11:55 from now on, and yeah, but I think they
Right.
get onto that after a while.
So we've got I know that we've got a couple of we've got a few people going to be joining us here in just a second, but Leanne's here, and Leanne and Carrie, that is really what matters. We got two Michelle, so I can say Michelle, and both people will wonder, am I talking to you or to you? We got
We
all
both
kinds of cool
matter.
stuff here. Yeah, that's right. Michelle lives matter. Absolutely. There is Althea. Good. Okay, so we're just starting here a little late. Normally it's about we're going to start that dinner. We're going to start at 11:55 or 12:55 or whatever. We'll start doing that. We'll outsmart you guys. You cannot run away from us. That's for sure. So anyway, looks like okay, we have Jim joining. Althea's here. Um who else we have? Malin. Hello, Malin. How are you today?
Hi, everyone. Thank you for mentioning me. I'm Mara's too.
Absolutely. Okay.
Hey, Scott, why don't while we're letting them come in, why don't you and I talk about just talk about what we did yesterday or on that one and just kind of I was telling John a little about it, but you never know where your clients are going to come from. Like an advanced market is simply a way to one get people out of debt, right? And two, maybe they need an IUL. Maybe they need something structured. They want to retire early. You don't know, like your leads, what leads you're working, when those leads can turn into an advanced market. I was working a mortgage protection mailer, and it's one of my real expensive mailers that I get in. And so the lady wasn't answering the phone call, so I sent her a text and sent her a picture of the mailer card, and she didn't reply back. So I thought, well, after about 3 or 4 days, I sent her another text message and simply said, if you would like to learn how to pay off your mortgage in about half the time um, without spending more money than you're currently spending, let me know, right? And obviously, I did that. And with that one text that I sent out to about maybe 5, 8 people, I got 3 appointments out of it, out of those texts I sent. So people are like, yeah, I'm interested, right? So when I get her on the phone, I talked to Scott prior to, I get her on the phone and I'm just kind of doing an analysis, right? So what is it you're really looking to do? And she said, well, I'm 65. I'm a nurse and I'm still working and I'm tired. She said, Darren, I'm just tired. And she said, I don't want to work. I did a 30-year note and I'd like to pay that house off early. And I need help. I don't know what to do. I don't really know. And Scott, I didn't tell you all this, but she said, my parents, no one ever taught me about finances. My parents were the one that kind of helped me, but they're gone now. And she said, I don't know who to go, where to go, or who to trust. And I said, well, I tell you what you're going to do. You're going to be in good hands with us. We're going to lead you in the right direction. And I'm going to go one step farther. I'm going to put you in the hands of somebody that I would trust totally with any one of my family members. And that's Scott McDonald. I said, watch this video. She watched the video, got back with her, and I sent her Scott's calendar link, and we booked an appointment, or she booked an appointment. But having said that, so here's what we found out. She has about 45,000 in a 401k that's dormant, just sitting there that can be used. She is willing to spend an extra house payment a year, which is about $1,200, that we can use. So what did that, that builds up at least another $100, and I think we found some money in life insurance, so we could probably add another $200 a month to it. and then we can kind of see what happens. I know Scott's going to do a deeper dive into it and try to work some more, but ultimately we're going to find a way to help this lady out, and it's going to be a win-win. But you never know. I say all that to say this: you never know who that next client is going to be unless you ask the questions. And so start asking questions to everybody you know.
Mm-hmm. That's
Very-
great. That's great, Darren. That's very, very good advice because honestly, if you're not careful and if you don't ask questions to understand the person's situation, you're going to come across as a one-trick pony.
Yeah.
You're going to come across as, hey, I've got a hammer in my toolbox. That's all I have, so I'm going to see every problem as a nail. And if that's a very dangerous way to go about running your business, it really is. And so I want to talk today about some of the things, some of the questions, some of the pivot areas that you get with our debt-free legacy products. So first of all, what I want to do on this call, and you guys know the drill, if you can get on camera, please get on camera. If you are getting out of the shower, do not get on camera if it's going to be a distraction, but otherwise get on camera. That would be great. And here's what I want to ask you guys. First of all, John, welcome, brother. I met John last Thursday, 6 days ago in Seminole, or as Darren says, am I supposed to say Seminole, like just OH, or is there an L? I'm not sure how to speak Okie yet.
That's
I'm working on it.
it's fun. Let's ask John how he says it. So I know if I'm just okie or just dumb. How do you say Seminole? Is it Seminole or Seminole?
We always throw the L in there. I mean, it's Seminole.
Okay, it's just me. That's just
Yeah,
my.
and that's okay. That's absolutely okay, man. We can, yeah, because you know what? Wait a minute. Michelle is also from Oklahoma. How would you say it there, Miss Lee?
You say Seminole.
Oh
The
my,
L rolls off your
Seminole.
tongue.
oh my,
Seminole.
making fun of me now.
Well, no. You know what? The thing is, we're going to come up with our own lexicon, Darren, for you. We're going to have the DW lexicon, and it's if it says this,
Yeah,
this is what he means.
that's right.
Now, I know with most people, I had another buddy from Oklahoma way back in the day, and it was pretty, pretty what do I want to say? Not rough. Like you had to know it a little bit, but no, anyway, I was just kidding. Anyway, so John, we met in Seminole, however you want to say it, last week. He came, actually, he came to our boot camp. Darren invited him. I believe Darren, you invited him, called him. I forget what exactly happened. And so he showed up and we got a chance to meet him, and here he is today. And John, we're looking forward, brother, just to walking down the road with you and giving you as much education and all those things as you'd like. So glad you're here to learn. So I wanted to welcome you in front of everyone here. Today's good morning, afternoon, I guess. Morning to you. Great to see you on here. So here's what I want to do. I want to talk about debt-free legacy. What are the things we look at? Because I think this is so important. Folks, I don't know if you understand this. Someone tell me a number of how many people in the US right now are in debt. What percentage? Of the 330 million, let's say, what percentage of people are in debt?
110. We're all in debt.
Okay, you said 110 or 310?
Well, there's only 100% of people. So
100%. I see.
Future
100, okay,
generations are already in debt.
okay, there you go. Okay, so
80%.
100%. I'm hearing 50%.
80,
54.
80%.
Okay.
88%.
Is Darren? Did you Google it?
No, I've heard you talk before.
Okay, so I want Michelle. Do me a favor, Jillian Brooks. Do I know Jillian? Jillian, do I know you? You're that. I think that's a new name. I'm not sure. Maybe I don't. I also have brain issues, so I apologize.
I think I was recruited by Darren.
Oh, great. Well, welcome. We're so glad to have you here.
Thank you.
Yeah, absolutely. So, Michelle, do me a favor and Google real quick. How many people in the US are in debt? And then let us know. Michelle might be
I'm gonna get this call.
not on the thing.
Hey,
Let's see.
77%.
77%. 77%. Okay. So not quite 100, but but by the way, of the population, how many people do we have in that population that are not working? They don't, right? So there's a good chance most of them. But at least can we agree that 77 out of 100 people are in debt? Let's call it 80% just because we'll round up. Do you guys understand? That means people that are, first of all, if people have wealth, do you think they would be in debt? Let's just do the math. So if you have wealth, you would be in debt? You think so, Leanne? Why is that?
Because
I
even
agree
the
with
wealth,
Leanne.
yeah, because even the wealthy people don't know how to spend their money wisely, and they'll go and buy flashy stuff but not pay their bill.
You know of any wealthy person that doesn't pay their bills but has flashy stuff?
Hmm.
Hmm. I would get new friends. Michelle, why do you say that?
Can't pick your family member.
Well, that's a good point. Michelle, why do you say that?
I mean, I agree with Leanne. You could have a buttload of money, but I mean, you could have also a lot of credit card debt because you don't know how to spend your money or
Okay.
invest correctly to pay
Okay.
off your debt.
When I say wealthy people, I don't mean people that have a good income. I mean people that actually have assets or whatever else. But anyway, the point is, I think 80% is a fair number. 80%. And so this is what I want you to do. I want you to look at, we have right now the first across your screen, the first two rows, you'll see four people. Unless you have a smaller screen, you might see. I want you to count the 10 because we have 14 people on here. I want you to subtract the last four. Look at that. Those 10 and eight of those 10 are going to be in debt. Of the people you call, and by the way, if you got a mortgage protection card, 100% of those people are going to be in debt because they have a mortgage, which is debt. Right? Okay. So somewhere between 77% and 100% is that amount. What does that mean for us? That means we have an opportunity to work with them, to educate them. How many people have been in this industry or with Agents First or less than 6 months? Less than 6 months. Okay, Carrie, I'll pick on you since you're always here and smiling and have a great attitude. Here's my question for you, Carrie. Had you ever heard of debt-free legacy or debt-free? I'm not going to say debt-free life because I know Equility you did, but did you ever heard of using life insurance to get out of debt within a third of the time before being here?
I did not, and
Okay,
it would have came in very convenient.
right? This is what a lot of people say, by the way. I hear this all the time. A lot of people say that. If Carrie, how many months have you been in the insurance business, studying for your license, taking your test, all of those other things, Carrie, roughly?
I've been in June 27th is when I got my license, and I've been going strong now for a year, a little
Okay,
over a
so
year.
so in just over a year, you have someone who has been full-time in the insurance industry, studying probably a month before, right? Who has
Roughly.
never heard of the concept. What are the chances that the person you're talking to on the other side of that mortgage protection lead or on the other side of that lead in general, what are the chances that they haven't heard of how life insurance builds wealth, how life insurance can get you out of debt, right? There is a very good chance the majority of the people that you're talking to have never heard this.
Right.
So what happens now? We have an opportunity. So just like Darren had mentioned before, when we are talking to someone with mortgage protection lead, we know they have a mortgage. How many folks, by the way, another quick side note question, how many folks have used our service that Darren has to get like 10 or 20 what I call free leads from mortgages around your zip code, where if you'll go work them, right? So Carrie's done that. There's, I'm not sure if there's anyone else on here because I don't see cameras on. So who knows who might have done that or who hasn't. Here's what I'll tell you. Anyone that's got a mortgage is a candidate. Anyone that has a mortgage is a candidate where you can call, you can drop by, you can do whatever you want. And basically, here is the question. If we had a way for you to pay off your mortgage, pay off your home in a third of the time, all while guaranteeing if something happened to you, your family would still have that house. Would it be a good idea for us to discuss? That is as how many people, Leanne, do you have a mortgage?
I do.
If I could show you how to get out of that mortgage within a third of the time, oh, and making sure, by the way, that if something ever happened to you, death, or you weren't able to work, that that mortgage was covered and paid for. Oh, and it won't cost you anything more than you're paying today. Would you have interest? Think about it.
Yeah.
This isn't a salesman. This is just a reality. It absolutely would. So let me ask you guys this question. Who has used that question to someone before? Who's used that question? Okay. Teresa, what did they say?
They said yes, that they're interested.
What, Carrie, what did your person say?
Tell me more.
Okay. Do you think how many people would say no to that? Well, let's assume half. Maybe they're having a bad day. How many people say no to you out of 10 when you talk to them about mortgage protection? 80, 90%? Right? The point is, folks, we have an ability now for you to go in and represent something bigger than just, oh, if you die, your mortgage is paid off. You can literally walk through with that lens and say, and be different. If they filled out your card, how many other cards do you think they filled out of curiosity? When's the last time, has anyone bought a house in the last 3 years? Anyone? Last 5 years? No? Okay, Carrie. When you first buy a home, you guys remember the first 30 days how you just get just drowned with mail. Right? Here's the plumbers and the HVAC and the lawn care and the sprinkler guys and all this hardscape and landscape and all this other stuff. And then you start getting these letters from your mortgage company, but it's not really your mortgage company. It still says RE and then the mortgage company, just to make it seem official. So you open it up. And these are the people that are out there asking for information. And the average new home buyer is getting about 3, 4, 5 of these mortgage protection cards. What separates you from that other agent? Darren can get someone for $80 a month to cover that mortgage. Well, he's got a guy down the street who the person's talking to at $77, and Leanne's $82. But Carrie is talking to them about paying off their house in a third of the time, getting them out of debt and allowing them to use their health to build wealth. Who gets that deal? It's not the cheap one. I'll tell you that. So these are the things that I want to make sure we're practicing. These are the conversations, the statements that I want to make sure that we have rolling off of our lips to our prospects. How many of us on Facebook have more than 1,000 friends? Just me and Teresa. Wow. How many know how many friends they have on Facebook? How many have Facebook? Well, Alec, you probably know because you don't have it. I got 0. I'm proud of it. How many do we have there? Let me ask you a question. Of all of your friends, who do you think has a mortgage?
Oh,
Right?
I got 1.5 thousand. I had no idea until I looked it up. That followed
You,
me.
you have 1,500?
I got 1.5 thousand followers. So
Yeah.
yeah.
All right. So of the 1,500 that Darren has, how many of those 1,500 do you think have a mortgage? Well, there's a good number. 70%, 50%. Can you imagine if Darren shot that out? I mean, he has been, he does this religiously, but if you were to put a message out or just a quick little video, hey, all my friends that have a mortgage, I've got a way you can pay this thing off in a third of the time. Oh, by the way, and build wealth while you're doing it. Who's in? How many, go ahead, Teresa.
Even if 30% of that 50% responded, that's huge.
So Teresa, have you figured out what you did I think a smaller debt-free legacy right here a couple weeks ago. I'm not sure if it
Yes, it
officially went
finally
through or
went
whatever.
through.
Good.
It
So
took a while.
here's my question for you. If you don't, and you don't have to be exact, but roughly, how much commission did you earn on that? I'm going to put you on the spot.
I would say in total would be about commission about 3,000.
Okay, about 3,000, and
I
it was
think
it
it's
was
probably more. I think it's
okay.
more.
Probably would be, I think, by the time because they only do 6 months and all of that. So
Right.
so let's call it 4 grand. How many people could use an extra 4 grand a month? How many people would be good enough if you realize if you did 2 of those a month, that's $100,000 a year? You guys realize that? Think about that. Now, to get 2 of those, how many people do you have to have responding to you? Especially if I'm helping you out or if Teresa's helping you out. If Michelle's helping you out, Leanne's helping you out. If we had those, you'll be batting 50%. So if you had 4 opportunities, 1 per week, you would close 2 per month, and you would have it. $8,000 a month, $100,000 a year. Think about that a second. And we're sitting here wondering, but I don't have leads. I don't have money for leads. I can't. I know I have to buy leads, but I don't know. Think about how this changes the entire dynamic. Think about this a second. Folks, I'm going to tell you this because you guys are on this call. You know what we're working on right now? You know what we're right in the middle of doing? We have, with our debt-free legacy, we are getting ready to implement a HELOC option as well. Do you know what that's going to do? Well, I'll say this, and I don't want to say too much more about it until you guys have to actually pay the money to figure out how to do this. Just kidding. What you can do, okay, what's an average house payment? A $500,000 mortgage, what would that be per month? Just principal and interest. Anyone? Ballpark?
500. How much?
We got 3,000. Someone said 100. What'd you say, Al?
3,000.
About,
Three-
yeah, 3,500.
1,500.
But 3,000, 3,500 is about what a $500,000 mortgage is. Okay. Now I want you to do some math real quick. How would you like to sell an IUL for 3,000 a month?
Love it.
What if we, I'm going to tell you guys, this is groundbreaking. I'm going to say it's borderline genius, but that's because it wasn't my idea. If it was my idea, I would have said it was genius. Borderline genius. We have the ability to take a HELOC instead of just using your health to build wealth. Now you can use your health and home to build wealth. And I can get you out of debt the same amount of time. Instead of you making your mortgage payment to the bank, you put that mortgage payment into an IUL, and you are going to be out of debt and the home paid off still in a third of the time. and now you have an IUL that you're cranking $36,000 a year into. What's the target premium on $36,000 a year? 12 grand? 15 grand?
Usually about half. Yeah. Yeah.
So you got someone out there who's getting a 70% commission rate on 15 grand?
Not a
Would
bad
you,
day.
would you be mad at that, Leanne? $8,000 just right off the top? Oh, and by the way, because they've structured this in with their house and all this other stuff, how difficult you think it would be for them to just not pay and have it be a chargeback for us? Man, this is as sticky as it gets.
Yeah.
So understanding now what we are coming to market with and what we're creating behind the scenes here, folks, this is like printing money. It's going to
When
be
will
like
this be
printing
available?
money.
This,
Well, it's available now, but start the conversations with people. Just say, if I
Well,
can.
you can have a conversation with me and EJ.
Yep, we will.
solid. Scott, I'm going to chime in here. This, when he presented this to me, I was like, at the beginning, I was like, dude, it's like over my head, right? I'm like, how did this work? But when we sit there and drew it out, I had my son-in-law come over. He drew it out on the board. And anyway, dude, I'm telling you, there is not another big IMO company doing what we're doing. Like, you can't find this. We had to dig down and deep to find what we're doing. This is game changing and proprietary to Agents First. Guys, this is, if you were ever, I'm doing you on another level. If you ever thought about recruiting, what a great recruiting tool that we have just come across. A HELOC loan to pay off your house in a third of the time, if not faster. Guys, it's crazy. Pay off your HELOC, pay off your mortgage, do all that stuff. And the example that Scott kind of gave me, there are people like Scott, that have $1 million worth of homes paid off. This maybe not in this picture, but they are all over the United States. People own 2, 3, 4 homes, guys. And that money is just sitting there. That in that home, all that money they've got in that home, that $1, $2, $3 million just sitting there. That not doing anything for them. What if we took those people and said, why don't we use that money just sitting there in your house and we turn it into a program that's going to generate wealth from now on? Scott, dude, incredible, genius. I love it.
Well, I would love to take credit for it, but I think Kat might have had something to do with it.
Oh, I
Kat,
was
go ahead
gonna-
and share with us a little bit.
Yeah, so what's completely different about the strategy that you guys are going to be, or we're all offering at Agents First here, is that this is a nightly thing that no other bank or HELOC. This is a different type of HELOC through, like you said, partnerships with our banks. We're working on it, but it's such an easy sale because if you can take somebody's house that is already sitting there, that they're already paying on, and then give them a way to have funds with that, like that house becomes a tangible cash flow piece of property that they can now do so many more things with investments. There's just infinite. So it's really
Yeah.
an easy sell. You guys will love it.
Yeah, it absolutely is. And I'm going to tell you right now, there is a difference within finance and asset management. It's what we call dead capital. You guys know what dead capital is? Dead capital is money that is not making you money.
Right.
So I want you to think about this a second. And I used this illustration this example before. My home in Florida. I think several of us on this call have been to my home in Florida. It's a $1 million home, nothing fancy. I mean, back 10 years ago was a $300,000 home, right? Now in the market, it's a $1 million home. But the point is, it's paid for. It's paid for. And so, what is that money doing for me sitting there on that foundation?
Nothing.
On lot 253 in Rosedale Golf and Country Club in Bradenton, Florida. What is it do? It is only growing, or is it growing? And if so, how? Someone help me out here. I want to hear you
The
guys.
real estate value goes up. and
There
then
you
they sell
go.
it.
There you go.
Yeah.
Thank you, Katrina. That's what Alec was doing. This is the up and down. Do you realize? So here's a question I have. Whenever we talk to someone about financial investment strategies, by the way, life insurance is not an investment because an investment, I want to make sure we all understand this. What does an investment need to make it an investment? An investment needs risk, or it is not an investment. We do not have risk in life insurance, do we? It is not an investment. It is a wealth and retirement strategy. It's not an investment. But if I had $1 million in my home and I wasn't doing anything with that $1 million, let's say it was just going, I don't know, what's the market average? 3% growth over the last 10 years, maybe? Maybe. So at 3% plus, oh, by the way, my house, let's say it grows 3%. What do I have to pay every year on that?
Taxes.
Property tax.
Right.
So I'm not gaining anything there.
Yeah.
Instead, if I were to take, I mean, imagine that's the equivalent of me taking $1 million and putting it into a savings account that is going to net me maybe 1%. What if we did this? What if we were able to harness that equity, the $1 million that's there, and put that somewhere where it's always going to be growing and making money on? And then I use all of my money, my bank account, all of that is tied to this HELOC. And now all of my income goes in here and I pay all my regular bills out of it. You do that, you are going to pay in a third of the time or less, not only your house off, but you have made money on the $1 million. Let me ask you a question. For us math nerds out there, Leanne, $1 million at 7% interest. What is it?
$70,000.
70,000. Who said that?
was
Thank
Michelle.
you. Thank Michelle.
Sneaky.
Michelle. Thank you, Michelle.
My sister.
Yeah, right. So you have 70,000 and that's per year. So Michelle, after 7 years, how much is that? 70 times 7 is
490,000.
There we go. There we go. All right. If you have a 30-year note and I'm going to pay my home off in a third of the time, which is 10 years, how much is 70,000 times 10? Is $700,000.
Yeah.
I have made in 10 years by doing this strategy, instead of owning my home and doing nothing for 10 years, just living there, I have made $700,000 on an asset that I have. And then what do I do with that $1 million? Well, I give it back to them. And then I do it again. I just made $700,000. I kept my home and I was able to make $700,000 by harnessing equity I had in my home. Now, here's the thing I want you guys to understand. What we're talking about here is not earth-shattering. People have been doing this, but the average American does not understand this.
Right.
And I'm going to tell you why. What is the number one profitable industry in the U.S., in the world, actually, but we'll just say
Real
U.S.
estate. Real estate.
So I hear real estate. Who else?
I agree with that.
Banks.
Ah,
Banks. Yeah, banks.
the
but then real estate.
queen.
There you go.
That's right. Miss Ivy. Listen, banking is the number one profitable industry in the U.S. Do you think they are going to educate us on how to not be required to run this thing out for 30 years?
Mhm.
Or do you think that they're going to say, hey, we've got a hack using our other department that we could literally cut your interest by 80%? You think a bank's going to do that?
No.
No.
Away.
So then who else would? Ooh, How about real estate agents? Would a real estate agent do that? Most of them no, because they have relationships with mortgage companies and mortgage brokers. And so now that we're okay, well, then who would tell us? Ooh, how about the federal government?
Negative.
No, they're not going to tell us. Why? Because the longer we have a loan, the longer we are tied up in loans, that is a stability signal for the economy. Do you understand that right now, all of the education we're getting on this is from independent thinking, business practice? It is not from what's going to be top down given to us. That's why this concept to us is crazy. But if you look at the wealthy, they're doing this. This is what they do. They use someone else's money to make money.
And a key point with this, like when he was talking about the banks, is that on average, this is mortgages are front loaded in interest. And not until about year 17, sometimes 15, are you even paying towards the principal of your home. And on average, people are selling and buying their homes every 10 to 15 years. So you're buying a bank of home before you buy your home. And then you're doing it again and again and again until you just bought the bank's homes all the way through.
And
Preach.
Kat, that is right. So that is not, and not only that, here, listen, you want to hear something else that makes me sick to my stomach, but they do it all the time. How many people you talk to said, yeah, I just refinanced my home. Oh yeah, the interest rates are way better. So 6 years later, I'm going to refinance it. Do you understand all your refinancing? All you've done those first 6, 7 years is paid them interest. And now you're going to refinance not the interest, but the principal, same amount of principal. You're just going to start back over again. This is why what we're talking about is so potent. This is why what we're talking about is so critical. Teresa, did you have a comment, question,
I do. I
statement?
have a question. Are you talking about now having a first position HELOC, or is it a regular
So
HELOC?
exactly. Well, it's not a regular first position HELOC, even at that. This is a first position HELOC that has proprietary nightly sweeps, but those are only offered through three banks in America. So we're getting the partnerships with the other two, but
So, for example, Teresa, what happens is every evening it
Yeah, I know how
takes
it
a hit
works
of that,
because
right?
I've worked with it. Yeah.
oh, perfect.
See, there we go. All right.
Yeah,
So
it's not
Teresa is going to be
it's not a new concept
No,
unless
it's
you
not.
haven't heard of it
No.
before, but it's a great way for you to pay off your home. I was asking that because then you still have access to the cash. So
Absolutely.
if it's the same way, it usually runs 30 years, like a regular traditional mortgage. So it'll be your 30-year term, right? On your HELOC.
Mhm.
And then you have access to the cash inside of the home instead of when you have your home traditionally in a regular mortgage loan, even
Mhm.
though you're already paying it off and you've paid off, let's say 200,000 and your
Mhm.
balance is only 100,000, you really don't have access to those
You don't.
200,000 you already paid.
Exactly.
You
Using
don't.
the HELOC, especially if it's the first position, you'll have access to that money to be able to invest again,
And when you're
you know,
hearing
to make it grow.
Yeah, when you're hearing the proprietary part, it's definitely when Scott and I partnered up and he was showing me his debt-free life concept, or debt-free legacy. There we go.
Thank
Concept.
you.
The participating whole life is what changes the whole dynamic on this.
Mm-hmm.
Yeah. So we now use that HELOC to fund the DFL. And so now you've got just another version of building wealth. Well, it's pretty amazing. So anyway, point is, I'm not trying to take this meeting here to necessarily talk about the specifics of this, but I want to let you guys know for this meeting, when we're talking mortgage protection, when you're talking to anyone, the pivot is simply this. If we could have you pay off that brand new house within a third of the time, would you like to know more? That's it. That's all we have to do. And then what happens? At that point, you fill out the Elevate form and you send it to your SME. And then from there, Teresa gets it and she runs with it.
Scott, on these
Yes.
times, they ask me, I hear this quite often. What separates you from everyone else that's calling me? Now we can truly say, before I said, oh, maybe our carriers, I could probably beat the rates. Nobody, I'm telling you, nobody would offer what we're offering. And so now we truly have an answer. And my simple question is, so did any of them show you the plan that we have that pays your house off in 1/3 of the time?
And
Boom.
on average saves 100,000
Done,
in
done.
interest.
Yeah,
So you're
and
saving
on
100, yeah, you're saving on average with these over,
Yeah.
I've seen hundreds of these done, on average 100,000 in interest. I've seen people save 275. I've seen the highest be like 480 that the guy was saving, but he had multiple properties. And it can be used on investment properties. You just get a tiny bit less of that cash available.
Yeah, but the thing is, though, everyone, just so you guys understand, the point is, even if you have a mortgage, even if they have a mortgage, so let's say, Leanne, you've got a $500,000 house that you have a $400,000 mortgage. Okay. So it's you've got a
I
mortgage
wish.
on it. We can still, or whatever it is, 'cause you're in Texas, so like it's 50,000. It would be $1 million somewhere else in America, but it's 50,000 in Texas.
In Cali.
So
There
so
are
you
some
so
Texas guidelines. I will say that just so that we're aware, there are some different rules with the banking in Texas. So I will have to get all those for you.
God bless Texas. But the point again, we're not digging into the weeds.
Not
The
the weeds,
the
but-
30,000-foot view here is if you and EJ had a mortgage that you had already had a mortgage, that's okay. We basically refi with the HELOC is the concept. Get rid of that mortgage, get rid of the money going to the bank, and you take control over your thing. Folks, I'm telling you this. This is the first wave we do is going to be for our agents who are looking how to cut their bills by doing this. You don't have to be you don't have to have good health for life insurance. You don't have to do any of that stuff. Literally, this is just mathematics. So that's kind of exciting too, because if you have a mortgage, you're able to look at this and say, well, not only am I the president, I'm also a client. Not only am I the owner of my own life insurance agent, I'm also a client because we want you guys to see this. It is absolutely unbelievable. So anyway, all about pivot, all about asking questions. And then what that does is it just opens up a lot more like, wow, these people are asking questions that they really care about that. They're so different than the other people. They're so different. Alec would ask, does it have to be paid off? Absolutely not. Your loan to value, whatever equity is in there, we can use that. You can use this just to refi your actual mortgage and just do it a different way. That's absolutely fine. And Leanne, I don't know what we're giving this genius product yet. Katrina and I are kind of working through that. I thought about honestly just adding it to our debt-free legacy and having it be a second part of it because it does come with the banking piece, so it fits there. I thought, that so we would offer it under our Fortis umbrella as kind of the premium piece. But yeah, I'm not quite sure yet. We'll maybe we'll have a contest for that one too, just like we did with our podcast with the
Are you
wise
gonna make
guys.
a video on this one as well?
No, not at all.
Eventually, I'm sure he will.
I'm just kidding. Of
I'm
course I
like,
will.
eventually, I'm like, wait, what? I was like,
And there
Right.
are going to be some qualifications, right? And all this, like,
Yeah.
not everybody will qualify for this, as great as it sounds. There
Yep.
are income
Yep.
requirements that have to be met. There's as
There's
you know,
like
as you're qualifying and applying for a loan. So even though it sounds wonderful, not all of your clients are going to qualify.
Absolutely.
And this is the way for you to show them how you can help them qualify by reducing their debt through the debt-free legacy.
Absolutely.
Mm-hmm.
That's what I was just going to say. The debt-free legacy ties right in. If they're not quite at that, I think it's 700 is the recommended. Sometimes they'll go to 660 credit scores, but we already have products that are going to help get them out of debt, do all of these
Yep.
things. Really a hole in one for the client.
So us as the
Keep talking.
specialist,
FedEx is here. I'll be right back. Hold on.
Okay.
You guys
Go
keep
ahead.
talking.
us as the specialist and as the one who has the information, we have to learn the products and the tools that we have in our tool belt to be able to guide the client through the process of where they want to get to. Like, we have to know their end goal so that we can guide them through that. Because even though everybody wants to be a millionaire or have no debt, it's going to take a process. It's going to be a while to get there. It's not going to happen overnight. But
And the
we have
more-
all the tools. We have all the resources to get them through that.
And the more, like you had mentioned, they do have to have a gap between, I think you guys, discretionary income and expenses. You need, the larger the gap, the more likely the bank is going to say, okay, they're not going to, just blow this whole HELOC. You need to be conscious. If somebody is not good with their money, do not give them 80% of their home value to blow on new cars and a pool and stuff, because people will do that. So you have to read your clients well too.
I like that accelerator, Alec.
Yeah, I do.
That's kind of
Hmm.
all right. We'll have to play with that. Anyway, so again, I don't want to get into the weeds of this because I know there's a lot of questions. Here's what I'm trying to say. With Agents First Advanced Markets, we are cutting and bleeding edge. This is what we're doing.
Mm-hmm.
This isn't your grandpa's life insurance company.
Right.
This isn't your father's. I mean, this is the stuff we are doing now. Do other people do this? Yeah, to a point. Here or there, HELOC's not brand new. That's been around for a bit. We're taking the best pieces and customizing this so that it fits and answers a huge problem in this country, which is twofold. Number one, 70+% of all people covered with life insurance are either, or excuse me, 70% of the population is either uninsured or underinsured. Number one. Number two, 77% of the population is in debt. If we can, with one stroke, take care of two things, that's a W. Ryan, dude,
That's all that.
that cracks me up.
You
So-
did, Ryan.
Yeah, absolutely, you did. Yeah.
Luckily, it's recorded.
Right. So just to let you know, we kind of went on to a little bit of a rabbit trail. We started out with debt-free legacy and how do you pivot? You know, when you're talking to mortgage protection leads or those kind of things. And basically, we went into how many people in the US are in debt. 77 plus or minus percent of the people are in debt, and 100% of the people that have a mortgage are in debt. So with that, it is a beautiful pivot to debt-free legacy. And then our new product that we're going to be coming out with very shortly, which is a specific custom engineered HELOC that works with our products. That is proprietary in, it's just proprietary because I said it is. So, and anyway, so that is going to allow people to get out of debt even faster, 5 to 7 years potentially. I still like to use a third of the time because it's easy and everyone's situation is different. So anyway, that's what you missed. You're exactly right. It's just something important. That was perfect. Yeah.
Well, thanks for explaining it. Yeah, it sounded like something big was happening. I felt unincluded.
Yeah, man. Yeah, absolutely. What's up, Darren?
No, it's posted on there, and I don't know if you saw, but as far as banks and are we going to partner with the HELOCs to be able to get that done, or that how did that work?
Yeah.
Maybe Kat can
No, we've got right now a couple of Kat, go ahead.
Yeah, absolutely. So we'll be partnering with the bank. So there's two ways. Scott asked me this morning. There's two ways that you guys get paid on these policies. One is through the bank's partnership with the HELOC. We get just a set flat fee, and then you're going to have your participating whole life that we do with the debt-free life. And those are going to be the two ways. So it is a partnership with the bank, and it'll either be with one of the bank or the other bank. And we'll just pick based off of what's best for the client. And there's different requirements for both.
It gets better and better every day.
Yep. David, what we got, buddy? Good to see you, man.
Hey,
another one
yeah.
of my buddies from Oklahoma there that I was able to see last Thursday.
Yeah, what a great time we had last week. So thanks again for that. And I'm late to this, so maybe you answered this, but these HELOCs are for homeowners currently. What about new buyers or first-time homeowners? Do we have something that we can work with as well?
As long as they have at least 10% equity in the home, they have to have a minimum of 10% equity to be able to start this.
Mm-hmm.
So, other
Okay,
than that,
so someone looking to buy a home, I guess maybe not a HELOC necessarily candidate, but do we have a first-time home buyer or someone that's making a purchase that we could offer a life insurance companion product at that time of the purchase, or is it only for people?
Here's what I'll tell you. First of all, once we get all of the details ironed out, David, we are going to have like these HELOCs can be used instead of a mortgage. Use this. And so these are the relationships that we're going to start building with realtors, with all kinds of other, places like this, because if we can get them on this sooner than later. By the way, you want to see what in the real estate market today, because we all know real estate's down about 20% what it was during COVID, right? We know that. By the way, do you guys realize why there aren't as many mortgage protection leads? It's just math, because there's not as many houses being sold. Not as many mailers being signed off on, right? Not as many. So it's a vicious cycle. So what do real estate agents try to separate themselves with? Just like life insurance agents, they need something different. They need something that separates them. Well, what if while they were trying to sell their house, by the way, listen, when you get this, when you find the house you want, I will refer you to a company that is going to put you in a specialized product to get you this house paid off within 10 years instead of 30.
Yeah.
Have them give you the referral. Do you think that I could tell that real estate agent, here's something you can say that's going to just about guarantee they're going to go with you versus someone else?
And
Can you imagine that?
I was going to say, to piggyback off of that, real estate agents love, love, love when you come in. And at first they are going to be apprehensive because obviously they're like, I want them, they have partnerships with the bank, like Scott had said. But if you explain to them, okay, they know everybody who's been in their home and has at least 10% equity. You can talk to them about the requirements and say, well, if we free up 10% equity, or if I free up all these people, they're going to buy another home. They're going to move their house. They're going to use that. And so they will start sending you all of those people that they want to buy again, that they know want other homes because they know their intentions there. So it becomes a really good partnership. Open houses are great because people always walk up and go, what do you do? Well, I'm actually just looking, but I do this, so I don't really need a mortgage. Or they'll start talking to you, why don't you need a mortgage? I do my own banking, blah, 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 conversations like, just real simple, easy.
And I wanted to add that even though there's not that many new mortgages, there's a lot of mortgages that are already in place that you have plenty of clients and customers.
And that's what you need. That's what you need. That's exactly what she said is key. So at least 2 to 3 years, ideally, they'll have 10% equity, just so you know, like not everyone has 10% equity, but most of the time after 2 to 3 years, they have 10%.
Yeah. You'll be able to get that there.
Of all the leads that I get in on mortgage protection are they're either like HELOC loans or just a refinance but they've got more money, right? So they might say they took out $50,000 of a $250,000 home to rebuild or do some work around the house, right? But they have money. Those HELOCs are small for a lot of them. So I bet probably easily a third of my mortgage protection leads are that way. So there's money there.
Yep, absolutely. Okay, we are at 1:55. Let's Leanne and I have a call here in 5 minutes, but I want to find out what are the questions we have before and has this been beneficial to you guys? I know it's a whole bunch of, hey, this is what's coming, but you can also, don't forget, DFL is here right now. DFL is alive and kicking. And if they got a mortgage, you can still have the same conversation. You don't need to bring anything up about a HELOC. In fact, I'd recommend you not. I would recommend you just saying, we have a way to get you out of debt within a third of the time. Would you like to hear more?
That's right.
And we'll just fire from there. Any final questions before we kick this? This in Leanne's clapping. That's not a question. Good. Okay. All right.
What do you got going on at 3 today?
3 o'clock, I have a call with Gail's client that's got about $8 million.
I love that. No, 4. Do we have the advanced training later today?
Yes, at 4 o'clock. Yes.
4 your time.
4 their time, 3 hours. Yeah.
Yep.
Okay. So guys, just to let you know, just kind of all I'm doing is trying to fill in here. So 4 o'clock today in Central, 3 o'clock Eastern. Scott does advanced market training, but that's for the guys that next level, right? And so if you're interested in learning the next level stuff, be on here at 4 o'clock. In the meantime, we got a really special training tomorrow with a lady, and Scott tell you more about that one, but you don't want to miss tomorrow's training at 9 o'clock in the morning. And then Friday we got the CEO talk, going to be really fun. Friday morning, 9 o'clock. Scott, that's it. I just want to kind of give a plug out for trainings.
Yeah, and I'll just say it real quick too. Everyone here needs to be on this call tomorrow. We have a special guest, an industry leader is what I will call her. This young lady continually sets 20 to 25 appointments per week, every week for the last 5 years. She has been doing this, and she is going to be giving this information and talking to everyone tomorrow about her secrets, what she does, how to be good on the phones, how to set appointments. Because let's face it, you don't set an appointment, you don't sell a policy, right? I mean, would we agree with that? So, how do we keep no-shows from happening? How many of us struggle with that? Oh, sure, I'll come and talk to you. I'll call you, and then nothing. So, anyway, tomorrow, Lindsay Eastman is going to be on this call. You guys need to be there. It's going to be great. Appreciate every single one of you guys. Thank you so much for your time, for your attention, for everything that you do. And I'm going to stop sharing because that's the wrong screen. By the way, we got a lot of cool videos that have just come out that we're working on now. But in the meantime, I'm going to play us out with a bang. You kids go with God, and we will talk to you guys later.
A good call, Scott.
Bye.